If you started investing and you look at your stocks and your earnings went down a couple hundred, or in this case, $2,000, and you started to freak out, just know that that is normal. The stock market goes up and down. You can't save your way to wealth. You have to be investing and letting your money work for you, but it is such a mind game when you're building wealth because you can look at this investment and say, wow, this is really failing. I'm losing money. What am I going to do? But the thing you have to remember is this is a long-term play. We're keeping this money in these accounts until retirement or until we need them. And ideally, that's going to be 10, 15, 20, 30 years away. You need to build up that mental strength and not think so short-term because we're not actually losing the money unless we're selling, and we're not selling. We're holding long-term. So the fact that it dropped $2,000 is okay. Let me give you a visual example of what I mean. This is VU over the last 6 months. It's up 3%. This is the stock over the last 1 month. It's down 4%. And let's say you decided to invest on this day where the stock was $557. You would be freaking out right now because right now the stock is $532. But like I said, this is a long-term play, and this is what that same stock looks like over the past 4 years. Investing in ETFs or mutual funds that follow the total stock market or the S&P 500 is going to be your best move. There's a concept called dollar cost averaging, and if you are someone that's new to investing, you need to make sure you're following this principle. Essentially, that means you're going to invest regularly. So every Monday, $10, $50, whatever you can do, right? Pick a number. But the goal is regularly, despite if the market is up or down. For example, in this 1 month span, we invest at the top, but we continue and invest when it's down. We invest when it's up. We invest when it's down. That will give us an average overall, and we will not feel like we have these huge fluctuations. Maybe this will help you as well, but I bought this stock when it was $57. And I continue to reinvest the dividends for the stock. So you can see it's always fluctuating, 56, 64, 72, 64, 81, and it's currently $72. If I just decided to buy this stock for $81 and then it dropped to 72, I could freak out, or I could look at it as like, oh, this stock is on sale. I'm gonna buy some more while it's down. That mindset is something that also really helps me. Say I want a pair of new jeans and then they go on sale. I don't think that the quality of those jeans is diminished. I just think they're on sale. So instead of looking at the stock market like something you're losing, look at it as something that's on sale. You really believe in this stock and now it's decreased, and so you want to buy more of that stock. The stock market and investing is a long-term way to build wealth. We have to start looking and thinking long-term instead of looking at a one-off investment and getting scared. I know investing your money is very scary. We don't know what's going to happen. It feels very out of control. But overall, the stock market has gained about 10% year over year. It is typically going to be the safest way for you to invest. When I first started investing, this was something I had to really wrap my head around, and now I invest weekly. I don't even look at it. It's set up automatically. Every Monday I invest and I don't even think about it. This will take time and consistency. Don't let your own head get in the way.